Okay, welcome. Still here for the Daily Market Pulse for Monday, January 13th, 2014. So stocks take a turn for the worse. We talked about the number of distribution days and how things were still looking a little dicey. Well, I think they've kind of revealed themselves at least partially. We don't know. There's nothing fully confirmed as of yet, but a decent confirmation because of the resistance. It might be enough. The more aggressive traders already going short for I'm not going to say extended period of time, but certainly for until they get the reversal back to the upside again. There could have been enough of a decline today to at least warrant a little bit of a bounce, but any of those bounces at this point, with any kind of a customary type of Fibonacci retracement, potentially anyway, could be, of course, a sign to sell further into this decline. So down in higher volume, added distribution days 7 and 6 now on the Nasdaq, S&P respectively. Everything, well, the U.S. index is closed below the 8 moving average, and the TSX still remains above because it was fairly high, much higher above the 8 moving average, so it's got room to go lower still if it does so at all. And then because of all this, the market uptrend is under pressure. And this coming almost a month later, because December 18th is when everything resumed back to the upside again. So 3 to 4 weeks later, here we are. That's kind of part of that Christmas rally also through the holiday season. So, but every time it's dropped, we've had drops of maybe 5 to 5.7% throughout 2013 on multiple occasions, and it's never gone much beyond that. So we've never had anything greater than a 6% correction throughout 2013. So now here we are in 2014. What will they provide now? It's so hard to say. So let's look at charts. Okay, so here we've got the Dow Jones. So we talked about the sideways. We had the bear sash at the start of the year. We had gone sideways, holding at the window multiple days. A little bit of roundedness here, but a couple of undecided days on Thursday and Friday. And if it was going to drop, it could drop quite aggressively, which is what it's done. It's gone it's gone through the window, and now it's gone into the 20-day moving average. The next place would be into the 16,200 range. So it's got at least 50 to 75 points, somewhere in that range to the downside, and then maybe even lower. So we'll have to wait and see. It's still not oversold, so we'll see just how rapid they drop this thing to the downside. So right now you're looking for support. If there's any bounce from here, you're looking to go right back towards 16,400 or so, maybe a little lower than that on a percentage retracement. So we'll see how that goes. You're going to probably want to follow this to some degree on any bounce on an intraday basis, not so much on the daily chart right now. All right, the S&P. The S&P, you can see here, again, into the 20, but also right at the change of polarity. We talked about that 1815, 1820 area before. That's where it's dropped to. It was forming a little bit of a scoop-like formation, but a lot of indecision in those candles. Kind of a lot of spinning top doji formations, but never clearing the bear sash high from January 2nd. So it's come back into that area. Now this is going to be critical. The 20-day moving average is there. The change of polarity is there. You'd expect a bounce, but then there's also there's certainly a divergence to the bearish side by looking at the stochastics, but this is critical. This could just absolutely fall through rapidly, or it looks like the hold may be steady. It might just go sideways. It could bounce a little bit more, but it could just as easily go boom, right on through. If that's the case, then you're looking at a big drop into the 50, but even lower into all this, right into this area right down here, back towards 1780, 1785 potentially. That could be quite the job there, sinking lower. That would certainly start aiming the stochastics back toward an oversold state, because it certainly isn't right now. All right, let's look at the NASDAQ. So there's the resistance area for the NASDAQ. You can see I've drew that red line across there. So there was a bearish engulfing back in December. There was another one, of course, in terms of a high, and somewhat of a hanging man on Friday. And I said, with the hanging man, it always creates some question, because it looks bullish, but it actually is a bearish signal, but it's not super bearish, but it's more bearish and certainly more suspect when it's at a resistance level. Here it is, and so there was the move. A little bit of a gap lower today, and then a rise back into that resistance area, and then an immediate reversal, and it just kept sinking and sinking. So we have similar highs here across here where this is red line, and of course you got the divergence down through here in the stochastics to the downside. You can see like that. like that right there. See, the highs were going lower in the stochastics, while the highs in the index itself were actually going sideways. So a little bit of a sign there that things were going bearish. Now it's back into the window for now at support, back in the small pivot area, back at the 20. So again, you'd think it would hold. So if it holds, great. If it doesn't hold, good night. This is a box formation going sideways between the highs we mentioned before and the window here for now, but pretty aggressive selling here with, I think, somewhat of an anticipation. This could go deeper to the downside. This blue line represents a former trend, so this is the area you'd be looking at to there, into the polarity area, and the 50-day moving average at about 40. Around 40.70, 40.75 is kind of what you're anticipating there on the downside if it goes through this level. Otherwise, you're looking for a bounce back toward the highs again. So it's a little dicey, but no official confirmation as mentioned earlier in this broadcast here. But again, with the hanging man, the resistance, the drop, it may be enough. But there's still a window here to hold a support. So that's why you have to just kind of wait to get a better confirmation, which is probably a close or at least some significant movement below this level here. Okay, TSX in this case, you remember the change of polarity, went higher, came back, tested, bounced nicely to the upside. In fact, right into the 1272 extension. That was a question, what were they going to do? Could they go higher into the 1618? And if the U.S. indexes, I believe, were going to break resistance and go higher, then this would go higher, but it did not. So you're into resistance, coming back now, likely back toward the 8 moving average, possibly back to retest 13,500 once again. But it's a dark cloud cover for now. At a semi-resistance, I don't want to call it full resistance because there's nothing else out here other than just a retracement level or an extension level, pardon me. But certainly instrumental nonetheless. Oversold, dark cloud cover at a 1272 extension. You're expecting some kind of a pullback, at least to some degree, probably back to the 8 moving average at a minimum for now. Trend's pretty strong here, stronger than the U.S. indexes for sure. Otherwise, a break above the high of today, you're looking for a continuation into the 1618 above 14,000, which would be pretty impressive. U.S. dollar, Canadian dollar, there's a big shadow that occurred on Friday with the large extension that went on for several days. You'd expect a pullback or at least a pause. That's what's happening out today. We're seeing it. Shadows on the upside are showing signs of rejection. So this could just simply consolidate, or it could potentially sell off aggressively, but one of those two are the likelihood. It's not likely just to go higher. If it does go higher, you're still looking at a possibility of kind of a rejection near 109, some change. So just watch for that because this is oversold and quite extended as well. Treasuries only went higher. I expected that this could be at least moving toward the 131 area. Initially, it's fairly extended now, 3 solid days. Moving averages are still to the downside. You see the 50 still declining quite rapidly. So I'm expecting this to start taking a pause here pretty quick into 131. This right here to maybe about 131.28 or so, near the 132 mark max. I don't think it goes much higher than that if it does at all. But you're looking for a pullback back toward 130 at this point, and looking for support there, and it may be a consolidation, sideways, and or a bounce, of course. So treasuries still look good to the upside ultimately, but first a pause of some kind here, potentially back, and then eventually back toward 131, 132, 133, and maybe higher. All right, the Japanese yen I think is worth it because it had a massive bounce for a couple days, Friday and today. So that little red candle you see is actually the after hours now. So the mention before was, of course, the polarity area. There was a support that now was broken. We had a fade that then formed a bullish engulfing. Quite the opposite of what we saw in the indexes. So we saw a sell signal on the indexes on January 2nd. On this case, on the Japanese yen, we saw a bullish reversal candle. So we had a very large bullish reversal right into a window. It managed to negotiate that area for several days, almost a week, and then eventually Friday plowed right on through above the 20-day moving average, which is the first time it closed in that area since the beginning in the first week of November. So 2 straight months. Now a huge day today to the upside, back through that support area. Now so that former support, then resistance, and now will be support again, likely. So you have an 8 moving average rising, about to cross a flattening 20. So this should strengthen that short-term to intermediate trend. And you'd be looking for support and a recovery and a retrace, yeah, essentially a retrace of some kind, but then eventually likely a bounce is what you'd be looking for into the next level here on the yen. Gold really not doing much of anything at all. I think we'll move right over to the crude area. So crude had a decent bounce on Friday, faded a little bit, so it didn't have the full strength that one would be looking for, but it was a bull sash as well. Not the greatest, not the strongest, so not super bullish. There was a retracement back to the lows again today, looking like maybe it's trying to bounce. So this is a support area for sure. We've talked about 91 to 91 and a half. So looking for a bounce here to go higher. There's still a little bit of a divergence here potentially on the stochastic. So I'm still looking for a kind of a bounce here, most likely. Obviously, if it starts to break down below 91.50 to 91 and a quarter, then you're looking lower. But right now, I'm still looking for the possibility of the bounce, the likelihood of a bounce higher for crude. Moving on over to small caps. Again, we talked about this at length. We had a resistance across this 116 area, a couple of sell signals, a falling window with a bearish engulfing, and it was negotiating that, barely peeking through on Friday, barely. But it still needed to get through and close through 116, which it could not do. It immediately faded today, gap down on the open, closed lower, new low into the 20. You're looking at the possibility of a kind of a support area right across the low of today as well. That may, of course, be renegotiated again. And then you're looking for the next level below that would be down into the 109, 109.50 area next. So that's what we're looking at there, the 50-day moving average all the way down to that level. So that's what we're looking at on the small caps. Let's look at the VIX now. Okay, the VIX, you can see huge pop. So there was the drop, of course, in that area. We had the hammer, a rebound back into the 15, almost the 1450 to 1475 area. Not quite 15, and then reversed in, from there. You have a flat 200 up there. There was a 20, of course, as well. Came all the way back down. This was the candle right here on the 7th. I thought that things were looking a little on the bullish side. It held at the window on that day, bounced briefly, came all the way back down to once again test that low, test the hammer lower shadow, and then huge bounce today. So it was again kind of a critical area. It's your typical 12 to 1250 area where usually it can bounce. Indexes were at resistance simultaneously. So it was a matter of this could just kind of stay down here and lull, go lower potentially, and the markets blast on through the upside, or you get a rejection in the indexes and then a bounce in the VIX, and that's what we're seeing here. So it's back into the moving averages. You're still looking for more upside into 15 once again, well, just below that, 1450 to 1475. But you can see a hammer and then a retest of the hammer with now a bull sash formation, very aggressive, essentially taking over 1, 2, 3, 4 candles on this reversal. So that's a pretty powerful, strong reversal candle, which tells me more upside is very likely on the VIX, more downside then, of course, on the indexes.